Alright, y'all. So I'm making this video basically to show anyone that is interested in investing the basic rudimentary fundamentals on how to invest. This is my strategy, so you can copy it down to the T, or you can take parts of it and apply it to your own strategies, or you can just not do any of this shit. Most people won't anyway. If you agree with some of the things, make sure to leave a like or share it with someone that you think this would really help them. If there's anything that you don't like, leave a comment below. I appreciate the haters, if there are any. That's what I'm working towards. If you're not getting hate from anybody, then you're not doing something right. So far, I haven't got any hate, so I need that, y'all. I need that. All right, so basically, I'm gonna show you how I invest $1,000, $1,500, and $500 for a total of $3,000. And it's gonna be a series that I'm gonna go throughout probably until the end of July 31st. And you'll see why and how I'm making that money and all that kind of stuff later on. I don't want to get into that right now. Basically, I'm going to use the Robinhood app. It's a very user-friendly app, especially for beginners. If you're thinking about getting into investing, I super highly suggest Robinhood. You can use the computer. You can log into Robinhood.com, or you can use the app. Either way, it's really dope. As you get better and you do more research into investing and everything like that, you can get into more, apps that are for like intermediate or advanced traders. I typically use reinvest because it has more tools. And again, I'm not being sponsored by any of these things, so I'm not making any money off this shit. I'm actually gonna give y'all my portfolio for free. That's right. I'm not selling you shit. I'm not trying to get you to buy something from me. I'm not making money off of this shit. I'm just telling you how the fuck you can invest based off of whatever income that you got, whether you're unemployed or not. And this is how we're gonna do it. So I'm gonna first talk about why I'm doing it, and then I'm gonna talk about the how. So why I'm investing is basically because now I'm in a position to invest. I have the money that's coming into me monthly is greater than my monthly expenses. My monthly expenses are, rent, water, credit card bills, and that's pretty much it. I put my, electricity and all that other stuff, all the expenses I put down on my credit cards, and I just pay my credit cards like the monthly minimums and shit for now, at least. I don't want to get too much into that. I'm gonna get into a tangent, and that's gonna like take away from everything. So yeah, so basically my monthly intake is higher than my monthly outtake. So when that happens, that's when I typically tend to invest. What I'm gonna do now is I'm gonna basically show you exactly how I invested. I'm gonna show you one part of it on the computer. If you don't have a smartphone, then you can just go onto the internet, go into Robinhood.com, sign up, make sure you have your bank account information available, like your routing number and account number, because that's all you really need to transfer funds from your checking or savings account to the Robinhood brokerage account. Also, I'm going to show you how to do it on the app as well. And yeah, that's it. So you have two different ways to do it. Now, my particular strategy is long-term. I do not like to sell. I just like to buy and hold. I'm a follower of the Warren Buffett strategy, but I also like to mix in a certain amount of growth stocks that are a little bit more risky. So you're gonna see a little bit of what my portfolio looks like. I'm also gonna put a picture up so you can see that as well. If you wanna copy it, like I said, you can go ahead and do that, or you can, take a little bit what I'm saying and apply it to your own strategies, and that's fine too. So basically, what I do is I invest in index funds. For the people that don't know what an index fund is, it's pretty much, think of it like this. Let's say you got one basket, right? And in one basket, you can either put one egg or you can put a whole bunch of eggs. If you buy one stock, that's like buying a basket and it only has one egg in it. Now, an index fund is buying that same basket, but it has multiple eggs in it, right? So the risk of the egg is basically whether it breaks or not. Now, for a stock, if you buy an individual stock, it can, go up and down and stuff, and you either lose value or gain value. But for me, I tend to hold on through time, and I believe in like longevity. So longevity basically decreases the amount of risk that you're willing to, that basically you're susceptible to. So the longer you hold something, the less risky it becomes. That's just a fact. You can disagree with it if you want, but that's just what tends to happen, as we can see throughout like history and the market and everything. If you are a day trader and you're like, trying to basically take on more risk, more power to you. I'm not. I'm a very lazy investor. I don't like to do shit. I don't even like to do research, but I do the research ahead of time so I don't have to do shit later on. So my portfolio is based on research that I've done like years ago. I have proof and records of everything that it grows. And like I said, I turned in 17,000 into 25,000 over a course of 4 years, averaging about like 11.05% returns. I don't know if that beats the market or not. I don't really look for that. I'm just looking for creating growth and allowing compound interest to work in my favor. If you don't know what compound interest is, it's basically making money off of the money that you just made. So for example, if you invest $100 and you're getting an interest, or you're basically getting a dividend, right? A dividend is shares of the profit from a company. So let's say a company makes like $100,000. All the shareholders, who are the people that own the stocks, they get a piece of that. So when they pay you a piece of that, what I do is I reinvest that piece back into buying some more of the same stock. So the money that they gave me, I use that to make more money. That's what compound interest is. You're basically just allowing yourself to accumulate. Think of like a snowball going downhill, right? A snowball might start off super small, and then as it goes further and further downhill, it just gets bigger and bigger and bigger and bigger and bigger. But it takes a long time for the ball to get big, right? That's compound interest. You might not see super great returns or like taking a big effect early on, maybe not even the first 1, 2, 3, 4, 5, 10 years. But then as you keep your money in the market longer and longer, that snowball is just gonna massively increase. And by that in mathematics, we call it exponential growth. Exponential growth tends to look like this, and then linear growth tends to look like this, right? I particularly am fond of the exponential growth because, like I said, I follow the Warren Buffett strategy. I believe in like buying and holding, reinvesting your dividends, and keep on stacking and racking. So that's my philosophy. If you have any questions, feel free to leave any comments below or DM me and I'll try to answer them in the next week's segment. I'm gonna particularly post these every Monday. And here we go. I'm about to show you what I do. All right, so this is what Robinhood.com looks like. I clicked on my account. If you don't have an account set up already, go ahead and log in and go ahead and sign up and log in and do all that. Have your bank account information ready to go. And you can like play with the top icons and stuff. I'm gonna go to account, I'm gonna go to banking. You can see that I actually transferred over $2,500. But with Robinhood, they won't put the funds available for you right away because it takes time for the money to transfer over. So they give you at least $1,000 to play with at first. So I got my 1,000 in, and what we're gonna do is we're gonna start with SDY, which is a ETF, or this is one of the index funds that I was talking about, and this kind of mimics what the S&P 500, the pattern that follows. And the S&P 500 is pretty much like the top 500 companies in the U.S. And it's a compilation of all of those, and you can invest. This is what I invest in. All right, so like I said, if you want to do your research, go ahead and do your research. I like this one because it has about a 3.2% dividend yield. And if you want to look at what's inside of this index fund, these are the stocks I was talking about. So those are the eggs, and you can go ahead and pause the video right there and look at it more closely if you like. I'm just doing this one take through because I don't want to do it again. So as you saw, I actually went to those 3 dots right there. I put in a limit order. I put in how many shares I want, which was 4. The limit order that I want to buy it at, as you can see right now, it's like $89 something at the time of the purchase. So I want to buy a little bit less than that. So I'm gonna put it at I'll put it at 88, and I'll put in I guess not 4 shares, but I'll put in 2 shares because I want to get the rest of my portfolio as well. And you'll see whatever else I'm about to buy as well. So I know 4 would be too much because I only got 1,000 to play with. So I'm gonna put in 2. I'm gonna change this. I put good till cancel and then review my order. So good till cancel pretty much means like it'll be good for 90 days. Finish that and boom, that's the first fucking stock right there that we get. Next we're gonna go to DVY, which is a Dow Jones Reflective Index Fund, and the Dow Jones is like like 30 companies, the 30 biggest companies in the U.S. And it's just it follows the Dow Jones, which is another index that's in the market. Again, do your research, guys, because fucking research really helps. Right now it's super cheap. again, these are the stocks that are inside the Dow Jones. You can pause it right here if you want to take a closer look and see what it is. I don't want to go over it. Maybe I will later if you really guys want me to, but this is what's in it. And you can see like this price right now at the time of purchase was 81.18 if you get the market price, but I don't want to pay that much. I want to pay less. So I changed that to a limit order. I probably want to pay about maybe $80 for it. I'm gonna get 2 of these. I put good till cancel. You know what I'm saying? That's the 90 that takes the effect for 90 days. And I review my order, make sure everything's good, and I buy it. That's it. Just like that, y'all. It's not too difficult. Next up, we're going to go towards, what's the next one? VIG. This is a Vanguard index fund. This one pays pretty good dividends. That's why I like it. As you can see, you know, like it's pretty strong. It grows over time. Obviously, see that dip because of the, you know, the coronavirus shit that happened. But let's see. You can see like right now it's at a discount price. So the last time I was there was like, you know, a few years ago. This is again what's inside of the Vanguard fund. A lot of good companies that you might recognize. Again, if you want to pause it right here, go ahead and look at it. It's currently like 115, but you know I want to buy it at I'm gonna just buy it at 115. Goddamn it, just to keep the numbers even. I'm gonna take 2 shares of these again. I'm gonna put good till cancel. Review my order. Make sure everything is good, and we're gonna submit this one. This one also has a good index, a good dividend yield of like 1.85. So what these dividends pretty much mean is like, yo, every $100 you invest in, you get $1.85 if that's the dividend yield, and that's throughout the year. And then these pay typically every quarter, so that's like every 3 months. But the next one that I'm about to put in right here, DTD, this is a Wisdom Tree U.S. Total Dividend Fund. This dividend pays you every month. That's why I fuck with this one heavy. And you can see, again, it's at a discount price right now, obviously, because of the coronavirus. It's $88. Last time it was $88 like, you know, 3 years ago or something like that. So you're pretty much buying something that was the same price 3 years ago. This one has like a 3+% interest, what's it called? Dividend yield. These are the companies that are in it. Again, pause it if you want to. And you know, you might recognize some of these. So this is what I was talking about, the basket with the 12 eggs versus the basket with 1 egg. These indexes that I'm buying have more than just one stock in it, and that's why I like it, because it's safe growth. It grows over time. They pay you to hold on to it, so why the fuck not? All right, so I'm gonna put in this one. I might want to buy it at 88. I'll put in 2 orders, good till cancel. Again, review the order, boom, hit that. Yeah, there we go. And that's what I like. Buy it, make sure I reviewed everything, and we done, son. There we go. Next one we got is, I think it's a CVY coming up. Yeah, this is a Guggenheim multi-asset income ETF. ETFs are basically just exchange trade funds. That's what it means. It's an index fund. You can see this one, it kind of holds its value over the last 5 years. I like this one because they pay a really good dividend. It's cheap. You can buy it, like, it's cheap as fuck. It's less than $20. They pay you a good, like, almost 5% dividend yield. These are the stocks that are within that index fund. And like, again, you can pause it right here if you want to like look them up one by one and see what the fuck each company does. If you don't care, then just like, you know, follow what the fuck I'm saying. Here I'm gonna put in let's see, probably 10 shares because it's cheap, and like I said, I'm playing with $1,000, so I'm trying to even everything out. It's at $16.27, so I'll probably just try to buy it at $16. Good till cancel. Again, that puts it the order in for 90 days. The point of the limit order is basically that it's gonna only go into effect once the market price hits what the price that you want to buy it at. Next, we got IDV. This is iShares Dow Jones. Again, it's reflective of the Dow Jones. This one kind of holds its value throughout time, but they also pay you a good dividend. Obviously, you can see the drop because of the coronavirus. These are the companies that's in it. These are international shares, so this means these are companies that are not U.S. based. But these are also really strong companies overseas. Like, again, you want to look it up and do your own research for it. I find that it works, so this is what I'm doing. I'm not gonna tell you how to do something that I wouldn't do personally. So this is what it's about. I'm gonna buy it at 24. I'm gonna put in 4 orders of these, and good till cancel. Boom. Review your order. Always make sure you're putting everything in correctly. You don't want to like fuck up and like mess up something. You know what I'm saying? So
It's easy, but then you could make simple mistakes too. And this one has a good dividend yield of like 9%. So that's why I fuck with it.